Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. First and foremost, all glory to the Most High God. Bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again, to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray. Use me as a vessel to bring your children back unto you. In Jesus' mighty name we pray. Amen. Glory to the Most High. Try and make him first in everything that I do, you know. But before we jump into the charts, right? Just want to say there was a time I used to sit down at the charts with no real plan, jumping between strategies, second guessing every entry, and honestly just hoping the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the three pillars that every trader must have in their trading to survive and thrive in the financial markets so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. But before we dive deep into the three core pillars, when you step into this arena on this battlefield, you must first have two crucial realizations. Realization number one, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do. Realization number two, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think success in the markets come from finding the perfect strategy or catching the biggest moves in the market. But the reality is, trading success is built on three core pillars. First is money and mindset. This is the foundation of success. Second, risk management. This is the holy grail of trading. This is what will keep you in a game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. And that's why in today's session, we're going to hone in on your trading edge. Now, everything we do here is built around one thing, and that is confidence in your trading edge. And that confidence comes from three things. First is understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one model with IPTA signatures that you trust and execute on a consistent basis. Third is having a plan and a process, because without plan and process, you're just reacting to the market and you're winging it each and every trade, each and every session. And this right here, this session that you're in right now, this is where we focus on the third piece, the process aspect. I'm not here to force trades, I'm here to execute my plan step by step in real time. All right, let's get into the live trading floor. As you're watching, don't just look for entries, all right? Pay attention to the process behind the entries because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, that's where we break down all three pillars inside of the program. I used to think winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, why you're doing it, before, during, and after each trade. And that's what we're building here. Let's get into our daily processes, okay? Our weekly target going to this week is 3%. All right, mental check in, feeling generally okay. All right, excited to see what price action has in store for us today. Excited to continue to grow, all right, and get 1% better. I back tested last night. All right, I went through price action yesterday's price action, and notice a few things that I'm excited to walk forward and also go back into the charts and see, right, if they hold weight or not. All right, but I'm very excited what I saw last night, so I'm excited to walk it forward and also go back this weekend and look for it more in the price action. Okay, it's going to help me reduce, all right, some of the losses that we've been taking in the retracement setups. All right, so I'm very excited for that. But anyway, all in all, nothing really going on mentally of note to mention here. All right, so um yeah, I think yeah, I'm okay. Just the feeling of stagnation just keeps creeping up, and all right, here and there from time to time, but I try to subdue it and just focus on what I need to do to get to the next stage. All right, so that's all I can do, and that's what I try to do. Anyway, I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News, all right, it's Thursday, April 16th. We have high impact news come out at 8:30. We have another one coming that just came out at 9:15 when you started this. And we have medium impact news coming out at 10:30 and 4:30 today. So we have news today, making it an optimal day to take a trade. Risk going into today, we're at 0.05 of account size, and we have a max of 0.75 on the day. Our weekly program going to this week is a buy program. Okay, let's go ahead and review price action overnight to see if anything's happened, all right, to change our weekly program for us here at I'm the Trader Capital. Still coming off the sickness. Is I'm feeling better, but like I still got minor symptoms. This was for my back testing yesterday. It was just so good. Oh my god. All right, nothing's really happened in price to change our weekly program for us. All right, for our weekly program to get changed, we would need to come all the way down and take Monday's low, which is not even there. All the way down here, take Monday's. Is that even Monday's low? You have to go from top, yeah, all the way down here. All right, so nowhere near that happening. Okay, so let's go ahead and review yesterday before we get into today's price action. Yesterday, our trade that we taped red, all right, our continuation setup that we've been tape reading this whole week, all right, because it's obviously been happening in the premium of the range, right, and I'm not confident yet in those, but definitely by the end of this week, starting next week, I'm jumping in those head first and feeling no type of way, all right. We're jumping into those. Anyway, this was the retracement setup that we ignored, all right, because it was in close proximity to our level of interest for continuation. All right, this was the trade that we taped red yesterday morning. And let's see the outcome of it. Magic Magnet doing its thing. I can see on here where it went up to better than I can on the 1 minute. Okay, we are further up. It gave us negative 5.5. All right, negative 5.5. Solid stuff. We were only in there one contract, so we were out at -1 anyway. Just like to know what else the trade could have offered me. All right, potentially, obviously later down the line when I have more contracts, I can leave a runner to actually my drawn liquidity that I have on price. Okay, so that's the goal, but obviously we're taking it baby steps. During lunch, we had a retracement set up. This was the only valid retracement setup that I saw, right, when I went back into price action and noticed what I was noticing in terms of looking for the swing lows, right, that classify as a valid low or market structure shift or retracement setup. All right, because for retracement setup, just because it's going against my session bias, I want to require more of those trades, and that's what I was looking at in price action yesterday, trying to see how, all right, if I could have avoided some of the L's I would have took, right, looking at the retracement setups that met my criteria, my current criteria, right, seeing if I could have avoided some of those. I can't wait to go back into Tuesdays as well and see if I see the same thing. I'm so excited for my back testing session this weekend. You have no idea. I'm such a geek when it comes to the candlesticks. It just makes me so excited. It makes me happy that I'm learning, I'm growing, and I'm understanding the candlesticks even better. Yeah, it's just it's a fun process, right? It's a really fun process, and that's how it should be, right? It should be fun. It should be exciting. It shouldn't be daunting. It shouldn't be something that you're like, oh, I don't want to back test today. I don't want to back test this weekend. You should be excited, man. You should be like eager to get into the candlesticks and learn more about it. But anyway, looking back, knowing what I know now, right? This wouldn't have been a valid retracement setup that I took yesterday, so I could have avoided this loss, and this right here would have been avoided as well. And this was really the only valid retracement setup I saw, knowing what I know now, right? From what we saw, noticed from yesterday back testing session. Then we had this continuation setup, all right, for lunch using first presented fair value gap on the 15-minute time frame there. It was so nice. Currently, I don't like trading the inefficiencies by themselves, all right? I'm collecting data on it, right? If I keep seeing things like these, right, then obviously the confidence will grow and I'll be more enticed, right? Or have more confidence, right, to be able to just jump in the inefficiency. But I like inefficiency and liquidity. Liquidity I can take on their own. Here there was no liquidity there that would, validate me or give me the confidence to jump in this. But I like this. It was clean. All right, and then PM session. All right, we saw a continuation setup. Why did the thing delete? Should be done here pretty soon. All right, we took opening range, PM session opening range, sell side, displacement, market structure shift back above the key level. Obviously, our dealing range was up here somewhere from what I remember. And then this was a beautiful, I taped read this as well on the PM session because obviously once again, it was in the premium right next to dealing range high. And yeah, beautiful stuff there. That's how we finished our day. That one gave us -7. I would say -6. I don't think it would have taken us out there. Anyway, that was yesterday. Let's get into today. We got less than 2 minutes to go until kickoff. First things first, nothing changes. Oh, what did I do there? Okay. First step is condition, all right? What bias are we going into today? In order to identify that, we first have to identify our dealing range. And in order to do that, we go from 12 a.m. to current price action. We note the lowest low to highest high. And just like that, we've got our dealing range, our field of play. And we know liquidity above and below dealing range. Above it, okay, we have 60-day high. Or let me adjust my 20-day. Which also yesterday's high. Above that, we have 60-day high, okay? That's potentially the only high we got there. London is in line with dealing range high. And below dealing range, we have PM session sell side from yesterday. And that will be it for today. If we go any lower, we identify anything lower that we need. But for now, we're good on that. Inside of the dealing range though, we do have 20-day high and previous day high as potential for continuation. And we're kicking off. Ding, 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 ding. 9:30 open. Opening range gap is below price, so we gapped up. So we have a premium gap higher. Seeing how price draws to consequent encouragement of that opening range gap. Let's back this thing up. And now we wait for one side of the dealing range to get taken, which will give us our session bias going into today. How we looking? How we looking? How we looking? Actually journaled yesterday. All right, started journaling back again yesterday, and that's pretty much what led me to see what I saw. Right. Um, so I'm happy that I'm back on that train because journaling is vital. Vital. It's been vital for my growth here in these markets. Why does this thing always go away? Looking like we're about to smash dealing range sell side. Whew. I guess it's done going higher and higher. Hopefully I can type this thing correct today. trying to figure this thing out, but it's just being so difficult. I don't know why it's being so difficult. Now it's disappeared on my ass. It said, what? You said I'm being difficult? Alright, now you ain't gonna see me no more. Where did it go? Yikes. Oh, there it is. Alright, smashing dealing range, sell side. Session bias has been confirmed as sell program, okay, which is going against our weekly program. This is the high that needs to go for me to be interested in a retracement. Let's pull out our handy dandy magic magnet. But we're also at a point where I could potentially see a continuation. We will be tape reading it because it's also close to dealing range low, right? It's selling in a discount, same thing we've been experiencing in the premium. When did that change color to that? Oh, we don't want to see these on a high time frame. No, thank you. Targeting PM session sell side from yesterday. So a draw on liquidity. As our condition has been established. We'll be watching this. We'll be watching this as a retracement setup. Confirmed. Two contracts it would have given us. For 1.5 there. Let's see how that plays out. The low that needs to go for the continuation is this low right here. Okay, didn't want that. Let me focus. Still would be in here. Came close to your stop, but didn't take you out there. This low doesn't take a high, so it's not, it wouldn't be a valid market structure shift for this time for me. Yep, there we go. Sell side taken. All right, we've got a continuation sell there, and you begin taking out this retracement buy. So we're watching this right here, putting this to the side here. Nothing wrong with that. What it did is give us the green light, go ahead for this sell here. So let's see, this is the high. 2 contracts. Wrong thing right there. This is now the high that needs to go for me to be interested in a retracement setup. All right, but we're watching this continuation sell. When we talk last line in the sand on this setup here, I'm looking at it's not very much clean price action. I'm looking at body closure and the main threshold here. Nothing yet, no alarm bells yet. Definitely would be getting it here, would be reducing risk on this trade, would be taking one off with one remainder to -1. Barcoding, we're barcoding. We would have taken something off this trade with the two contracts, would have taken one off, alright? We have one left remaining. Because we got a body closure above main threshold here. But this price action here is not that clear, right? It's not that clean. $9.50 macro. What you got for us, 9.50 macro? And this right here, this is the reason bread and butter setup. I mean, bread and butter account would be out of this continuation sell already at 0.5, -5. This is exactly the reason why I don't like closing my trades. Even after getting a warning, I don't like completely closing the trade, right? This is exactly why, right? Reduce risk, but leave a potential, right? I've seen this enough times. All right, I've got so many scar tissues. Haven't done that. Like closing the trade once I get a warning sign, closing the trade, and then watching the trade turn around and go in the direction. Seen it so many times that I've said to myself, I'm no longer, no matter where I get how good I get a reading price, I will never completely close the trade. I will reduce risk, but I will never completely close the trade prematurely. I will let it hit my stop before I close the trade prematurely. This is why. Anyway, we have one contract looking to see if negative one gets hit. We're looking at 306. 306. Is it gonna give us? Oh no, it's 308. Sorry, we're looking at 308. But bread and butter account would be done here at negative 0.5. Entry here, coming out here. Bread and butter. Anywho, this is now the high that needs to go for me to be interested in a retracement setup. Something I'm paying attention to. Negative one. Negative one, getting smashed. Thank you very much. Let's see what else this trade will offer us. Adjusting dealing range because we're taking this 15-minute candle low that already traded to and through dealing range low. This is still the high that needs to go for me to be interested in a retracement setup. We'd be out of this trade already because we would have closed one off here when we got the one alarm bells warning sign. Okay, we'll still have one remaining, which will be coming out at negative one. Let's see what else this trade offers us today. Targeting PM session sell side below price here. Magic magnet doing its job, pulling price to it, doing its job. It's all in the magic magnet, guys. It's all in the magic magnet. We're trying to tell you. Cool. So same thing that we've been seeing in the premium, right? It's the same thing that we're seeing here in the discount, right? Price clearly didn't want to retrace, right? Even higher here. Well, entry is close to dealing range sell side, right? Dealing range low. So technically we are still in a discount. We're selling in discount. Same thing, I've been collecting data on buying in the premium. So yeah, definitely after this week, we'll go on that. But negative 1.5 getting smashed here. Using this as first presented, I wouldn't regard that as my first presented. I would more like this one better than this tiny one here. I wish I had a filter, you know, but yeah, it is what it is. I will be watching how price behaves in this inefficiency though. Tiny one here though. We also have lunch session sell side below PM session. Should price want to go any lower? You are respecting this tiny inefficiency here. let's see if the -3 in close proximity to our drawn liquidity. So that would be ultimate terminus. Does that make sense? Does that make sense? Does that make sense? My fear is always that, the charts don't look right. Midnight. Excuse me. All right, we have open range, buy side and sell side confirmed. It's hard to see central here when my screen is over here. I'm trying to be centralized, but it's very hard. Thursday reversal profile, so it's a possibility. It's always a possibility. We have been climbing for a minute though, so now I'm not saying it's gonna go all the way down and take Monday's low, but let's see. I want to see how price behaves in here, if and when it gets in here. For now, this continuation sell has given us negative 1.5. For us, we'll be out of the trade. Okay, we'll have the one contract remaining after closing one up here because we got our warning sign that potentially we could be offside. And this is exactly the reason, right? I'm just happy it happened today, right? So I can can say this is the reason why I don't completely close the trades even when I have I've seen a warning sign that I'm potentially offside, right? It's not over till the fat lady sings, and the fat lady wasn't singing yet. Until the swing high goes, all right, my trade has not yet been invalidated. Yes, I can get warning signs that I could potentially be offside, right, and reduce risk, but in terms of closing the trade completely, I've been burned so many times, learned from my past experience that I will not be doing that anymore. I got the scar tissues to prove it. So experience will be your best teacher here. Four more minutes remaining in this macro time. Okay, we're inside that inefficiency now. See how it behaves. Oh, don't need this all the way out here. the high up here that needs to go for me to be interested in a retracement setup where we're at right now. This is the high. Nothing for us to do. We're not here to force anything. We're here to follow our procedures and protocols and our processes. And right now, there's nothing for us to do. Still watching this continuation sell, right? Still would be in there. Stop would be reduced to 0.75, which is right close to the swing high that I want to see go for a retracement setup. So once we take that, all right, then we'll be taking out this sell trade. Until then, still in there. Macro is about to be done. Showing respect for that tiny inefficiency there that I regarded as first presented fair value gap. about to take that high and take us out of the trade. Maybe we already established last line in the sand for this setup here. Took something off. Would have been out of this trade anyway, regardless. Market structure shift here. I would be interested in a continuation, a retracement setup. But that range is huge, isn't it? Hey, if it gives me a contract, doesn't matter the size of the range. It'll be a long. This trade would be done for already. Oh, allows us one contract to get in. It allows one contract. Target wise though. Above dealing range high. Okay, so we'll pay attention to that. So us getting the retracement, all right, what that means, gives us the green light go to anticipate a continuation, which obviously we don't have time, so I'll just be watching it. It'll be this low. We would be done with this continuation sell, all right. Even if he had more contracts and we reduced the risk, it would have come and taken us out here. So this trade is done, did its job. We're watching this retracement setup, but still anticipating continuation sells. So our condition going into this session is a sell program, which is going against our weekly program, okay? To be aware of that. Last line in the sand for this retracement, I wouldn't have a clue. Wouldn't have a clue actually. Potentially this order block here is what I would be considering right now. That's my last line in the sand. This main threshold of this, alright, we just confirmed a continuation sell here. So let's watch that. See how many contracts it would have let us in with that. What is being shipped? It obviously would have been tagged in there when it came up and down and that like that. 2 contracts, okay, 2 contracts. So once again we're looking at 1.5. be last line in the sand was what? Was one contract anyway, so it doesn't really matter the last line because we wouldn't be reducing risk because it's one contract, so we'll be letting it come to take us out. But for a retracement setup, this big ass range, yeah, I wouldn't be interested really. It would just give me the green light go for this retracement. I mean, this continuation sell. I always get them mixed up. Commented out with a block there. We'll be watching how price behaves in this inefficiency here. Last line in the sand for this continuation sell is this OB here. Body closure in the mean threshold. We'll be reducing risk. 2 contracts, taking one off. Starts in the macro, completes outside of the macro, because we do have the swing low inside of the macro, right? Then it confirms outside of the macro. Valid sell, valid. So this will now be another data point set collected for trades that start in the macro, complete outside of the macro, which I think we're leaning towards taking those trades regardless. Just because of the current market climate condition, right? My mentor said he's finding himself taking trades before the macro and after macro. I said I'll be watching this inefficiency. Last line in the sand is body closure in the mean threshold of this order block here. Come in there. Like that, we close way below this inefficiency here. I like that. This is now, keep this there. The next high, I'll be interested for retracement. Yeah, I wouldn't even be interested in a entry here, because we have our level of interest for continuation right here. Doesn't make any sense. What it does do, right, is give us the green light. Go ahead to anticipate the continuation. Bread and butter will be getting out of there. Bread and butter will be taking us out. Entry here, exit there. Bread and butter. Alright, let's do a question. While we watch this continuation sell, let's do a question. Yeah, you hold all them craps there. Do that. I need to store these better, because I have to go looking, searching for it. Alrighty. Oh, hold on. Still no body closure. Still nothing for me to do. Real stop hunt right there. Is there anybody that's selling right now? Let's take them out, because they could potentially be on side. Let's run them bitches. Excuse my French. I think we answered that already. This is a good one. How much do I need to start trading? How much do I need to start trading? You need $0, right? First, you need to focus on attaining the skill, mastering the skill, right? Overcoming yourself. You need $0 to start trading. 0. There's so many opportunities now to scale once you have the skill set, all right? But first, don't focus on how much money you need, or how much money you want to make, or how much money you're going to make. Focus on attaining the skill set, right? Focus on coming up with a process and procedures and protocols that you're going to follow on a consistent basis. Make sure you've back tested that and seen it, the results from that, right? It's always going to be the same answer, right? When it comes to trading, right? Understand the market, right? In general, understand the market that you want to trade. It could be forex, could be crypto, could be commodities, could be stocks, right? It could be bonds. Yeah, so you have to understand that market, right? Then you have to have a model, right, that you've back tested and collected data on. Then you have to have a plan and process. Focus on that first, right? Once you have that in place, then, right, you can either, right, do a prop firm, go with a prop firm, right, which is going to be a small amount of investment to get a challenge, pass the challenge, right, and then you'll get to trade simulated accounts, right? Still demo trading, but with the potential to take withdrawals, and that would be what, like less than $100. You can get a prop firm and trade with. So zero initially, right? Because you have to have the skill set. But with a small investment of $100, you could potentially get an account with a prop firm and trade that, right? But obviously you have to have everything that we just talked about before prior, because you can't just come in here and wing it, right? You would just be wasting your money. So yeah, $0. I wouldn't say $0. I would say $0 to $100 then to start trading, right? But master the skill first before you even think about the money. I know we get into this industry to make money. I get it. I came in here to make money. But you have to put that desire, right? That want, that need to make money behind you, right? Initially, right? You have to just forget it and just focus on the skill set. That's the most important part, because once you have that, right, the results will follow and the potential is limitless. But $0 to $100, I'd say, right? But first, focus on the skill. Focus on the 3 things that build confidence in your trading edge, right? Focus on those 3 things initially, and then when you're ready to scale, you can scale with just $100, really and truly. But for a live account, oh, okay, so we've got a warning bell, a warning sign here. Okay, so one contract will be coming off this trade and targeting -1. But for our bread and butter, all right, would be out of this already. So we've got a warning sign. We've taken something off the trade. All right, now we're targeting -1. Let's see how this plays out. We are entering at entry time. 10:30, first hour of trading is behind us. Oh, another thing I did notice as well is that I want price to be staying in the lower portion of that range. So yeah, that's something I did notice as well in my back testing yesterday. The setups that pan out, right? The setups that give me, that yield what I want to see, are the ones that once it causes the market structure shift, right, it stays below stays below 50% of this range. That is something I noticed yesterday, and it's something that I want to pay attention to and keep collecting data on. Alright, as you can see, this one here, it didn't stay below, right? It came rocky, right? It came to, it didn't make it to 0.75, but I want to see it stay below, really and truly, 50%. I'll allow it to wick in here, body closure here at 0.75, definitely offside there. Here, and staying below 0.75, right? I want to see stay below this though. But the ones I saw yesterday literally didn't even make it to 0.25. So that's more things I need to pay attention to, right? The job is never done. It's never finished. There's always more to learn, more to add to the arsenal. Oh, this takes that low here, so this technically should have been the high for retracement setup, because this high here takes this low, then we come and we take it. Okay, didn't notice it at the time. I think I was too busy answering questions answering the question, but I'm seeing it now, so I'm gonna pay attention to this retracement setup. We can delete this off the chart. Takes swing low back below it, so this is the prominent high I want to see for retracement setup. Came back in it at 10:30. So watching this retracement setup, also paying attention to this continuation sell here, still would be in there, okay, but we would have taken one off. I want to see how price behaves in here. Coming to first presented, we took that high, so I don't want to see price take this low for this retracement setup. It's just there's only two types of setups, and I'd be mixing them up. I told them no one's gonna see this. For some reason they didn't believe it, so here we are. Ooh, ah. I told them from the start, right from the very start. I told them they were gonna see this. For some reason they didn't believe it, so here we are. I like that. I like this for this retracement setup here. Job is never done. Job is never done. Yeah, this retracement setup, I wouldn't mind engaging in that. If I had seen it, I wouldn't mind engaging in it. But that's cool. I'm happy I was still able to notice it after the fact, right? Nothing wrong with that. I'm gonna go ahead and delete this one just for now. -1 getting smashed on that. Cool. So what I noticed last night is playing out very nicely. It's just up to the trader now to identify it, pay attention, right? I was too busy answering the question, but it's all good though. It's all good. I'm happy. I'm so happy I was able to see it do its thing. this high took this low below the dealing range. That's why it was the next high for me to be interested in for retracement. However, this high also takes a low below the dealing range, right? So then this becomes the next valid market structure shift, right? For the for the retracement. For the retracement setup, sorry, for the retracement setup. This is what I was noticing, right? Because recently, obviously, I've been taking a lot of L's in the retracement setup just because price hasn't been retracing that much and then continuing higher. So I went back into yesterday's price action, noticed a few things, right? That would have avoided, some of the retracement losses that I took, right? Just by being picky on the swing highs, the valid market structure shift, right? So now I'm paying attention to requiring for retracement setups, the market structure shift to have taken liquidity above or below the dealing range, right? This, let's take our handy dandy tool. Let's zoom in, so it makes it easier, educational, because that's what we're here to do, right? We're here to learn the processes behind the entries and not blindly follow what I'm doing here. Anyway, this swing high here, all right, this is our external liquidity, dealing range sell side, all right. This is what we use. External liquidity is what we use for retracement setups. This swing high takes this swing low, all right, back below external liquidity. So it makes it a valid swing high or for a market structure shift for a retracement setup. Make sense? I require the swing highs or the market structure shift, the swings that cause the market structure shift, to have taken liquidity above or below external liquidity, to consider it as a valid market structure shift for the retracement setup. It will make more sense the more you keep showing up. But for me, it's something that I just noticed in price as well. So I'm also collecting data on it and also trying to make sense of it. But I understand it. Something I noticed that I'm seeing, paying attention to, trying to walk it forward. All right. I'm always looking at ways to reduce my L's, right? If I'm taking multiple L's in a particular setup, I go back, I analyze and see if there was something I could have done differently, right? To avoid the L's. If there's not, there's not, right? I'm not always good. Losses are the only thing promised to us, right? My job here is to control it, all right, and try to mitigate it as much as possible. I'm not always gonna be effective in that, all right? But the more I can avoid unnecessary losses, all right, I would prefer to do that than anything. Capital preservation is my number one job. It's my number one job. We still would be in this continuation sell, by the way, all right, with one contract remaining. Fat lady isn't singing yet until this high is taken. Just wanted to, point something out here and pay attention. But this price action is really something. It hasn't picked a side. It's picked a side, but it's not really, picking a side. The fat lady ain't singing. forgetting that this is a burner account. Hold on. Hold on. Let me find ya. Yeah, the fat lady gotta be singing, man. She gotta sing. That's what closes the show out. You know, in opera, I think it's opera. The fat lady sings. That's what, like, finishes the show. When the fat lady starts singing, you know that it's coming to an end. I told him, I told him now I'm gonna see this. For some reason they didn't believe it, so here we are. Ooh, ah. I told him from this, I still like this price action here for the retracement setup. Okay, still showing respect for this inefficiency and this auto block here. So characteristics right now for this retracement setup is I would be sitting comfortably. All right, I'm not seeing any alarm bells for this trade here. But for this continuation sell, yeah, definitely, know that I'm offside on that. I knew I was offside from here, from 10:30 when we had a body closure above mean threshold of this order block here. So we reduce risk. All right, so we have one more contract waiting for that fat lady to sing. And this right now is only giving us -1. Let's see how many contracts it would have allowed us to get in at. If I saw this in time, I definitely would have been interested here. 3 contracts, so we're looking at -2. We're looking at -2. Fat lady's about to start singing on. Yep, she's singing. So yep, would have been taking out this right here. Bread and butter though, it did give us our bread and butter, which is -0.5. And this retracement setup is in line with our weekly program, right? So I'm also paying attention to that as well. It's just the initial ones, right? The initial ones, well, for this week, they've been taking a loss, the initial ones. Cool. -1.5, right? Would have one more contract aiming for -2. Let's see if we get there. This model right here, using first presenter fair value gap, doing its thing. This one right here, once again, re-entry. In line with my narrative of a retracement setup, right? Also in line with weekly program, right? So I like that. I'm watching price in here, this inefficiency here. Should it get disrespected, all right, I'll be watching price in here. Redemption for retracement setups. That's because we've implemented something now, right? We're collecting the data, walking it forward. So far, I like what I'm seeing. I like what I'm seeing. Entry here, bread and butter, exit at 0.5. Bread and butter. Bread and butter setup. Oof, oof, oof. I can't wait for that account. I think that account is gonna smoke all the accounts. It's gonna smoke everything. Because negative 0.5, 90% of the time, it will give you that. Heading to -2. Above price, okay, we have open range, buy side. -3.5 and perfect alignment with dealer range high. Let's see if it's the same. Oh, just a tick above it. Just a tick above dealer range. Just a tick. 1050 macro. It's crazy that at the macro times is when my watch tells me I need to stand up. I don't know who set it up like that. That's just weird stuff. So I already know the macro is starting before it even starts because my watch tells me, hey, it's time for you to stand up. Yeah, alright. Let's get our steps in. Hoo, 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 hoo. Ooh, ooh, ooh. Oh, stretch. Oh, wee. You did it. You didn't tell me that I did it this time. 1050 macro. Pop, 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 popping off. Like how price respected this inefficiency and left a small portion of it left open, alright, as signs of strength. Signatures that I'm on side on this retracement setup here. Right from the very start. Ooh. I told him. Ah. Stop playing. For continuation, this is the law I'd be interested in. Still respecting this inefficiency. Wicks do the damages. Bodies tell the story. Let's see if -2 is on the cards. Let's go back to our initial. Just watching something. This is the low, this is the low, this is still the low. Pushing price in here. Came back into this inefficiency here. Wicks do the damages, but look at the bodies. Look where the body is going to close. Still got about less than 10 seconds on it, but just look at the body. Yeah, the wick dropped all the way down here. Only came back into this inefficiency. But the bodies still respecting this inefficiency up here, really and truly. Wicks do the damages, the bodies tell the story. Alright, -2, we're coming for you. Nosy, nosy. Just the two of us. -2 on the way. Give it to us. We work hard for it. We worked hard for it. See. Cute. We have this inefficiency in here that we're paying attention to. Anyone who trailed, this was the stop hunt for you. For you trailers. Trailers, the people that trail their stop. They were like, ooh, we coming for you. -2 incoming. We seen it in the crystal ball. This is still my draw on liquidity until dealing range buy side gets taken. Okay, this is still my draw on liquidity. However, if dealing range buy side gets taken, all right, then our draw on liquidity will be 60-day high. -2, getting smashed. Thank you very much. We'll be out of this trade now. We'll still watch to see what else this trade offers us, but solid retracement setup. The one time I don't take a retracement setup, that's when it pans out, but it's all good. I'm still happy and pleased I was able to identify it after the fact, right? And still watch it do its thing. Okay, this would have been a valid retracement setup for me. All right, probably the only one. Yeah, I don't know about the initial ones, right? I don't know about the initial ones. I'll need to collect more data, but from what I've seen so far and from yesterday, it's only been 2 days of data, or a day and a session of data. Not enough, obviously, to make refinements, but I like what I'm seeing so far. Like I said, I cannot wait to go back onto Tuesday to see if those 3 hours that I took on Tuesday, potentially, if any of them could have been avoided based on what I know now. It's exciting times, man. Exciting times. Heading to open range buy side here. This is still current. Oh no, it'll be this low now. This is the low currently. I'll need to see go for a continuation sell. Like I said, until we take dealing range buy side, all right, my assumption is always the continuation in the direction of the side that we took initially. Solid stuff though. Also, the model I'm watching, right, doing its thing. This right here. Oh no, it doesn't come back into first presented. This one does though. Yeah, solid, solid. And, right, and this is what I was talking about yesterday. Well, this is what I saw and this is what I was trying to mention in terms of trades that are high probability, right? Trades that are high probability, they tend to stay, right, in the upper quadrant of the range that causes the market structure shift. So you can see once we took that market structure shift here, obviously price came down into, well, it stayed above 50% anyway, it stayed above 50%. But this candle opened here, closed above here, right? It stayed in the upper portion of this range here. Hold on, let me extend it so it makes sense in what I'm saying. Once we took the high, right, we stayed in the upper portion. Ignore this candle because it's the candle that took the high, caused the market structure shift. We're looking at the 1027 candle. Once that happened, once we got the market structure shift, right, price stayed in the upper portion of this range here, all right, and that's something I noticed yesterday. So with the high probability setups, all right, high probability trades, right, they will stay in the upper portion of the range here. Like this one, it wasn't that high of a probability because obviously it came all the way up here, even closed above 50%, but didn't quite make it to 0.75, right? A closure above 0.75, I'm gonna do something in the trade. Obviously I need to collect more data, but negative 2.5 getting smashed there. That's for later down the line for me to collect more data, but that's just something that I'm noticing, all right, as I'm going through the data and analyzing the days as they finish. So yeah, this is characteristics that I want to see that I'm on side in the trade, right? That is a high probability setup, right? I want to see it remain above 50% of the range that I'm using for my entry, for my risk, for my targets, right? I want to see that. So just next phase of progression, right? Next phase of progression. Yeah. Cool. Now it's about like characteristics of high probability setups, right? What I want to see in a high probability setup. So for this trade here, let's get back to what would have been my last line in the sand here. Looking at it. Boom, boom. Yep, yep. It would have been a body closure in the main threshold of this OP here. It's no. Yeah, that's not the OP I'm looking at. Yep, yep, not that. Yeah, it would have been this. The down close candles. Of these two down close candles, main threshold. Taking open range buy side, taking open range buy side. This is now the low. I'd want to see for continuation to the sell side until we take dealing range buy side. That's always my assumption. Or until we take the other side of the dealing range, I always assume price wants to continue in the direction of where we're coming from. But sexy retracement setup. Ooh, I'm so happy and pleased I got to identify it, even though it was after the fact, right? I was too busy distracted doing other things, but that's no worries, no qualms. I'm still happy and still pleased to have able to watch it and watch the characteristics and what I wanted to see price action do exactly as they were supposed to. Okay, so yeah, yeah. Solid stuff this week. Solid stuff this week. Do have they're not relatively high equals high 8650. Yeah, they're not relatively equal highs. Head into our higher time frame draw on liquidity. We're about to smash dealing range and buy side, and that will flip our bias from sells to buys. So this retracement setup was in line with our weekly program. Collecting the data, getting that 1% better each and every time I'm in front of these charts. -3, like we said, was right close proximity to our dealing range high, so that was would have been a terminus for me on this trade. Let's see if anything lines up with our draw. Yeah, not really. Not really. Nothing really matters to me. 11. Solid stuff here today. We like it. Let's see if we take dealing range buy side and our bias gets flipped. Come on. Hasn't happened yet though, okay? Hasn't happened yet. Just being proactive. Maybe by the time we do our review and by the time we do our trade performance review, it will be done. But let me not be premature and leave it for now. So let's go ahead and review our trades for today. All right, when we came in, all right, we waited for price. Step 1, we established our condition as a sell program going initially into the session. We're still in a sell program, right? Until we take dealing range buy side, until price trade to and through dealing range high, we're still in a sell program. So no. Yep. Initially, we established our our session program as sales, right? We saw a retracement set up that potentially I would not have engaged in because it was right at the level where it would be anticipating a continuation to the downside, all right? So we watched it. It gave us the green light, go ahead to then get into the continuation, right? So the continuation, right, we got our warning bells to reduce risk, which we did, all right, and not completely close the trade, which, like I said, I've got enough scar tissues in doing that, and I've learned to, hey, no matter what, I will reduce risk, but I will never close the trade prematurely until, all right, my trade is invalidated by the swing high being taken, right? Until then, period, I'm not doing that. I'll reduce risk, but I won't close the trade, this was an example of why I do that, right? Because I've seen this has happened to me so many times, right, on this journey, that I've learned from my experience, be like, you know what, I don't like how I feel when this happens, right? So in order to combat that, that's why I had that procedure and protocol in place. But anyway, this trade gave us negative 1.5. We had one contract remained in anyway, so we would have been out at -1. Gave us our bread and butter, and -1 and -1.5. Cool. Then we had another continuation sell right here, all right, that gave us a bread and butter. That was pretty much it. Then it came to take us out. Obviously, we knew potentially that we were offside at the 10:30 candle when we had the body closure above the mean threshold of this order block. It only allowed us one contract, I believe. So we would have stayed in it and then let it hit up. But if it was multiple contracts, obviously we would be taking something off. Then we obviously missed this retracement setup. All right, it was a valid retracement setup. We saw it after the fact. Nothing wrong with that. All right. Taped, read it, the remainder, paid attention to the candlesticks and how they were behaving. It was showing me characteristics on one side. Right, it gave us 3 contracts, so -2. We were out, but obviously it's giving us more than that. And those are pretty much the only trades today. All right, so yeah, solid day of tape reading. I didn't even intend to tape read today, but that's just what happened. So it is what it is. I have no issues, no qualms with it. Tomorrow will also be a tape reading session regardless. Taking dealing range high. Okay, so our session bias has flipped from sells to buys. Now we're targeting 60-day high above price, right, which is where our high time frame draw is. Okay, so it's also our draw here on our session. Now, yeah, that's what I'm saying for the initial ones, right? Because then it will have to be this low. That will be something I'll need to collect data on for like the initial retracement setups. Because I don't yet have a swing low, right? That takes a high above the dealing range high. So then what, right? Oh, something to collect data on. So fine with that. Fine with that. But all in all, good luck, good trading, happy hunting. We're not there yet, but all right. Good luck, good trading, happy hunting. All in all, good morning session here for me. Here for us here, I am the Trader Capital. Solid tape reading session. I got a lot out of it. Walked forward, something I noticed in price yesterday, and something that I want to keep walking forward. Obviously, I'm going to go back in this weekend. I'm going to go back into price and collect more data on it. Anyway, let's do a trade performance review. What I did well today is that I showed up. All right, I got 1% better. Gained experience, learned lessons that I'll take into my next trading day, next trading session. For sure, got 1% better in terms of reading the price action and in terms of, you know, requiring more from the charts when it comes to retracement setups because they're going against my session bias. Okay, so that's what something I picked up from this week because I've been taking a lot of retracement setup that I've been taking a lot of L's in it, right? So now I'm looking to be more picky in terms of the retracement setups, so I can mitigate some of the losses that I've been taking. All right, majority of them I'm gonna go back and confirm, but probably could have been avoided, knowing what I know now. So yeah, definitely pleased and happy that I was able to identify this setup, even though it was after the fact, right, and still watch it do what it was supposed to do. Okay, it gave us a negative 3.5, which was in line with our dealing range high. Where I fell short today, woke up by a decent hour, got my morning routine in, arrived at the chart, stuck to my procedures and protocols and my processes, didn't deviate from it. All right, it's hard to fall short when you're tape reading, really and truly. All right, I didn't take any trades. I just pretty much turned into a tape reading session. Didn't mean for it to be, but it did, and there's nothing wrong with it. Like I said, I love tape reading. There's a sense of calmness and sense of not relief, right? That's the only word I can say, relief, when I'm tape reading, because there's no attachment, there's no results, there's no outcome oriented. Even though I don't really focus on the outcome regardless, there's no attachment. Like I'm not losing or making anything regardless of what happens in the chart. It's just me getting closer to the candlesticks and how they're behaving, really and truly. So yeah, all in all, just to say, I don't think there's anywhere I fell short today. This week has been sick, patting myself on the back because I ain't really been falling short. Maybe Monday I fell short somewhere, I think, on the wake up time and morning routine. But after that, it's been smooth sailing. How I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, series of losses deter me, distract me from what I got going on. I got a solid foundation in terms of my processes. Just have to show up and keep exercising that discipline muscle, all right, in following those procedures and protocols and following my processes, and the results will come, right? I'm not pressed about none of that right now. The results will follow. The results will follow. All right, before we wrap up here on a solid tape reading morning session here, I'm the Trader Capital. There was a time, right, I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth, most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't quite have the full system yet, that's exactly why I created a 10% to 1% club. That's where we go deeper into all three pillars, the full model, the risk management system needed to keep you in a game for longevity, all right? Keep you in a game for a long time, right? It's a career, right? It's not just, I'm not just trading for the fun of it here. This is going to be a career, right? So you need a risk management system that will keep you in a game for a long time. The money and mindset principles needed to join the 1% club and the exact process to follow on a consistent daily basis. So if you're serious about becoming consistent, that is your next step. You know, I used to think the goal was to win more trades, but the goal is to become the type of trader who can perform no matter the outcome. I think I've been displaying that, right, since we've started this stream, where I've been displaying that, right? So no matter the outcome, I'm still showing up, following my procedures and protocols, following my processes, and letting the outcome be out of my hands, because it is out of my hands regardless, right? Once you enter the market, the outcome is out of your hands, right? It's in the market, the model, the trade management's hands. There's nothing left for you to do but pay attention to the candlesticks to see if you're seeing the characteristic that you're on side or off side, right? That's what we've been working on recently, right? Because once you have that, right, the results will follow. That's all for today, folks. Thank you for joining us today. Hope to see you in the next AM session. 9:15 kickoff. It's Friday tomorrow, all right? Hope to see you there. I'm the trader here, signing out. Good luck, good trading, as always. Happy hunting.